I'm David Tinsley with Lenders Cooperative. I'm the head of SBA LSP services, and I'm continuing this video series on the updates as a result of the 5010-8 that was announced and will be effective June 1st. It was a 6-part video series. The first 2 were covering the program and eligibility changes that we're seeing as a result of this. And here in this 3rd video, I'm going to cover generally the changes that you can see in the collateral and insurance requirements that are part of the 7A program. So if you think of the collateral changes, there used to be 3 categories under the 7A program, and in SOP 5010-7 and then 7.1, it was the same. There was 50,000 and under. Then there was 50,000 to 500,000, and that matched the 7A small program. And then there was everything above 500,000, which was really what we would consider standard 7A. Those 3 categories have more or less sort of been reduced down. There are still 3 categories. As I said in the previous video, that 7A small program was reduced from 500,000 to 350. So really those categories are now 50 and down, 50 to 350, and then everything above 350 up to that maximum loan amount under the 7A program. So 50 and under hasn't really changed. No collateral is required, but above 50, you have to get collateral. Within the previous program, you sort of had some freedom there. You could follow your non-SBA approach, which is that general do what you do philosophy. And as I said, in one of the later sessions, I'll go into a deeper dive into really what all that means as far as do what you do being removed in terms of a general approach within the program. But really, it's not entirely gone. So within the 50,000 or over $50,000 loan amounts up to the 350,000, you are going to still look at your non-SBA portfolio and your lending activities to see how those are treated. But really, it's more from the perspective of are you doing more than that, and therefore do you need to do more? So within the 7A program now, SOP 5010-8 is saying that you must take collateral. All right, so it's really about reasonable and prudent lending practices, which at a minimum, you need to go read that section and kind of look at that closely. At a minimum, you're probably going to take something like at least collateral on the equipment that you're financing, or it might be all business assets. Clearly, if you're financing real estate, I don't think any of that would be shocking in that size range. You would be taking those pieces of collateral, but the ability to there was an area there that somewhat allowed you to be able to in theory lend and not take collateral. That's gone. It's clearly not going to be something that's allowed within the program. So just if you have questions, please feel free to reach out. I'm happy to kind of walk through this in more detail with you. But really and truly moving forward, you're just going to have to get collateral. There was the question of whether or not a personal residence, like a primary residence or other personal real estate, above 350, it's a throwback to the 5010-6 and earlier. You take all available collateral until you're fully secured, and that does include the personal residence of, say, the guarantor, or other personal real estate, or even commercial real estate owned by guarantors. You're going to take everything to try to reach that fully secured status. In the case of loans 350 and under, this is one of those areas that while do what you do has generally been removed, in this particular area that is still something you're going to pay reference to. So it does not necessarily mean that just because the loan isn't fully secured, you are required to take a personal residence. That's left up to the judgment of the lender. You are not prohibited from doing that, but you're also not directly required to. So that's kind of the update to collateral. And also as a subset of collateral, we can talk about guarantors. The concept of the substitute guarantor was removed entirely from the SOP. Now that's not the same thing as a supplemental guarantee. That's still allowed, and it's sort of just in general prudent lending practices. There may be cases where someone's not a direct owner, or they might not have been required to be a guarantor, and you are still able to take them. But that's more the nature of supplemental. But the concept of that substitute guarantor was removed. So let's talk about insurances. So first off, hazard insurance. Again, with the change of the 7A small program, again, 500,000 was that upper limit was moved down to 350. Every loan Yeah, under that 350 under, and especially and where there's collateral that's involved there, you do have to have hazard insurance. That is going to be required, and they're serious about it. If you can't get the hazard insurance, you can't close the loan. On the Connect call, that was made abundantly clear. That was pointed out specifically. There was even a Q&A session where that question was followed up for clarification, and it was very clearly explained there. So they're taking this seriously. Keep a close eye on that. And let's talk about life insurance too. If the loan is not fully secured, you need at least enough life insurance to cover the gap that's there. And you're going to use the liquidation rates that SOP outlines. All right. So that's on all the loans over 350,000. Loans under 350, you have some freedom there to choose whether or not you have to get that life insurance. And that doesn't, SBA is not saying you shouldn't. It could be prudent to do that, but you do have some more freedom there to consider whether or not you must get life insurance. And then, as always, there's probably a lot more nuance to this. So what I would recommend is take a close look at the SOP when you're going through this. That more or less wraps up this section of as far as collateral and insurance that I wanted to go through. In the next video, now that we've wrapped up the collateral insurance piece of it, I'm going to focus on the removal of that do what you do philosophy. There's a lot more broader impact there. And if you have any further questions, you can email me at that address that's here on the screen. Or if you want to visit our site, there is a question submission form that you can utilize there that we'll monitor and respond to. And thank you for watching this session. I will see you in the next one.